Hey, what's up? Welcome to this live stream. Today we have something super exciting for you. We are talking about a company called Fathom AI. And what they do is they are a Zoom integrated app that is currently raising money on Wefunder at a $30 million valuation. And we will talk about whether or not this is a good company to invest. We'll talk about what the company does, what their philosophy and what their business plan is. And then we'll talk about whether or not this company could be massive and be the next unicorn. So without further ado, let's dive right into it. So first of all, we want to talk about why we chose Fathom, and we'll talk about that right here. I was browsing. I am a venture capitalist at heart, and I'm an angel investor, and I like to check what companies are out there in the world of venture investing and angel investing. So I've been browsing Wefunder over the past few months, and I've shared a few other companies that I'm interested in and that I found some interesting information about. And you can check them out on my channel. So feel free to subscribe or check out my other videos if you're interested in crowdsource investing, angel investing, venture capital, or if you're an entrepreneur and build your own companies. There's some good tidbits and information and hacks in there for you to learn how to invest, make money, or start your own company. So why did I choose Fathom? So I looked into a few of these companies here. There's quite a few startups listing on Start Engine. And as you can see here, the most notable and angel-backed companies are listed at the top. I've been browsing through a lot of these, and I found that many of these companies do have very high valuations. So for example, if we go to the first page here, we see that Ground Floor, for example, has a $240 million pre-money valuation. And if with venture investing, I look usually for early stage companies that have a lot of room to grow and give you large returns. So in this case, if you already have a $240 million valuation, there's not much room for you to grow and 10x or 100x or even 1000x your investment, right? So that brings us to Fathom. So Fathom is their slogan is never take notes on a Zoom call again. And really, what they do, we'll check out their videos, we'll check out what their website looks like and what the application can do, and then talk about the investment and why this might be a good investment or it might not be a good investment. So let's start with the video here.
Yeah. Yeah. What? Yeah. Yeah.
Load it.
Yeah. Yeah.
All right, there we have it. So this little product demo doesn't really tell us much about the company. Sometimes Wefunder campaigns have the CEO talking about the company or what they do. In this case, they just show you a product demo and a little animation of what their software can do. But that doesn't tell us too much about it. So let's go to Fathom AI. So again, never take notes during a Zoom call. Again, Fathom helps you recall and share important moments from your meetings. Here we can see it records the meetings. You can select highlights and then record those. Just one click, AI does the rest. Then you have instant access. When a call ends, you have instant access to the call recording, fully transcribed along with all of your highlighted moments. So this can be super helpful for sales teams or for companies that like to have a lot of transparency within meetings or like to share meetings that with other team members that weren't able to attend the meeting. So that I can see that already being useful. And I've had the issue myself where I've been just taking notes and wasn't really able to focus on the call as much, but rather on like what information do I want to share with other people in my team or with managers or with other things. So that is, I can see, be really helpful. Then it summarizes that as you saw in that little animation, and then it lets you integrate it with your CRM, Google Docs, Gmail, and task managers, which again can be helpful for sales teams or other people within the company. No more data entry, so that is really helpful. Automatically generates and syncs all your call notes with the CRM. And here's for an example of how it integrates into HubSpot, Salesforce, or other CRM tools. And then you can share your highlights within your team. They have a Slack integration, so you can just send the clip instead of having to send the whole clip. You can send a link to the clip that is then hosted on the Fathom.video website and platform. Fathom helps create high-performance remote teams, automatically sends highlights to Slack in real time, search transcripts across all your own Teams calls. So I can see this feature in particular being helpful when you have an hour-long call, you record it, you just transcribe it, and instead of having to go back into the meeting and say, oh, what did this member say? You can search for his name, or you can search for maybe you're talking about sales or about strategy, then you just type in strategy and you see exactly which part of the video is based on that section that you're looking for. Then there's also live coaching. I don't think this is too helpful for me or for other people. I'm not sure if this feature will be used a lot, but we'll see. This kind of helps you understand whenever you're talking too long. It gives you a monologue timer, so it keeps you very short for keeping your thoughts concise and never rambling on and on, because it warns you that, oh, you've been talking for 2 minutes. Maybe you should ask a question, or you should let someone else take the call from here, or switch the conversation to someone else. All right, so that's it but let's get back into Fathom. Here's the key highlights of this company. So we see on the left, we have 30% month-over-month usage growth in the last 6 months. So this is important to note that this is definitely not user growth. That would be insane, but this is usage growth. So I assume that they calculate this with number of calls recorded on the platform. They say that they're #1 rated product for SMB on G2. G2 reviews reviews services for B2B SaaS companies, and it pushes out websites to people that look for helpful softwares to use. They have a net promoter score of 85, which is fairly high. So that is that the net promoter score tells users or tells investors how viral can this be, how organic is the growth, and how happy are the users with the product. It also says that it's the #2 AI app on Product Hunt for 2021. So that was last year. That is impressive, but Product Hunt can also be gamed by having a certain amount of votes. And if you have a large network, you can get more votes. So I'm not too impressed by that. It's still great, but I'm not basing any investment decisions on that. The fifth highlight here is that it's the top app in the Zoom app marketplace. And I already did some research here looking into the Zoom app marketplace. It does not come up as the top app. I see Course, which is one of their competitors. But if we go through these, we do find Fathom not on the main page. Conversational AI, let's look into CRM. I'm not sure how they rank themselves as #1. They are listed a little bit down the line here in the app Zoom marketplace. So that is not the best, but still being on the front page can be very helpful. Let's get back to the main page here. They previously raised $5.6 million from top VCs, angels, and Zoom itself. So that is a great note of confidence, because it shows that Zoom has recognized the value that Fathom brings to Zoom users, and they thought it would be helpful to have a stake in the company to either get some overview of how well they're doing, but also to support them in growing. So with that, let's look into the founder is Richard White. It says he's an engineer turned designer turned startup generalist. That's a good slogan, but he previously founded User Voice, which is a top platform for product feedback, and he grew it to just shy of $10 million in ARR with $9 million of outside investment. And I did do some research here on Richard White. It shows that he is Y Combinator class of winter class 21. So he recently joined Y Combinator, which can be helpful for fundraising and for product development and for the network that the Y Combinator brings. here it talks about the Fathom position he recently started 2 years ago. So it looks like Fathom started in September 2020. And as it already mentioned, he did start a previous startup or website called User Voice. He's the chairman of the board, and he's been working on that for 15 years. So that's quite a long time. Here goes talks a little bit about a bit more about User Voice. So if we look into User Voice itself, it's a pretty slick website, and if they make $10 million in annual recurring revenue, that is really good. It shows us that this founder has previously started a company and is confident in what he's doing, and he knows how to not only build the software, but also how to scale it, how to manage a team, how to sell it to investors, and then how to get customers. And that is very, very valuable in most companies that we invest in. We look for capable founders that either have done it before or that have a unique advantage over other founders that are working in the same space. So about Fathom, it says here they talk about why they started this Wefunder campaign, and they pretty much sell it as in they want to give it as thank you for the support of the early adopters, and they want to not only have venture capitalists partake in the upside of this company, but also have users be investors and fully support it and be promoters of the company, not only as users but also as investors. Here we talk about people love Fathom. Again, they talk about the net promoter score of 85, which is really good, and then they have a PMF score of 67. So for people who don't know what a PMF score is, it's the product market fit score, and this is a survey that you can send out, and it's especially helpful for early startups, for the earliest users to see, is this the right product that we're working on? And as I already mentioned, anything over 40% is considered really good, and having 67% is really excellent. It shows that users love the product and that the product market fit is there. They say that the number one rated conversational intelligence tool on S&P on G2. So if we go to G2, here again, it's a website that ranks a bunch of SaaS companies, and they show and promote companies that are used by a lot of product managers, product designers, and other people. And they already mentioned that they are highly rated on here. So let's look at Fathom. This is also a third party, so having 430 reviews is really good, 5 out of 5 stars. And I assume that they talk about more of the platform, what it is, and the reviews. So if this was a longer video, if you're interested in learning more about this, let me know in the comments, but I want to keep this review as short and sweet as possible so you get a whole overview. And let me know in the comments if you want another video on this company, and I'll do a deep dive into the economics and market sizing and valuation. I'll touch on that here, but again, I can make an in-depth analysis as well. Here we'll just talk about the top zoom. We went over this already. Here they talk about virality. One of the features that Fathom has is when you use Fathom, it calls in as a separate person, as a note recorder within the phone call. So everyone that uses Fathom will spread the word of Fathom by just using it, and then other people see that they're using it. A perfect example of this is Calendly, where people send out their Calendly and say, pick a time where I'm available. And through that, people see that people are using Calendly. And because of that, more people will use Calendly if they like the service. So that is a really great growth hack that they're using. And they say that they're having a K factor of over 1 for activated users in just 6 months. And a K factor over 1 just means that the product is considered viral or that it grows organically. I would be really interested to see what the real K factor is. Is it 1.1? Is it 2? Is it 1.5? But regardless, this shows that there's an exponential growth in users on the platform. Here they talk about that this word of mouth virality combined with the Zoom app marketplace is the primary source of new users. So it looks like they're not spending too much money on marketing. Here they say they spend about $1,000 per month on advertising, which is very low. So I assume that if they spend a little bit more on advertising, they could also get more users. And in their in the use of funds, they say they don't spend a lot of the money they don't spend they don't plan to spend a lot of the money on advertising because they have this organic growth. Here we see that the number of calls recorded is just growing exponentially, and that's partially because of the positive K factor and adding new users. But then also imagine each new user they bring to the platform, they don't only record one call and then they're done. What they do is they record multiple calls during each month, and because of this, this is such an exponential curve for the product usage. For monetization, they say that um, it's best to use it as individuals, where the current freemium model allows them to be free in order to get the word out. But then they say their main focus to monetize is really use it as a team or a company. And for that reason, they focus on monetizing team-wide on a company-wide deployment and leaving Fathom free for individuals. And that's a classic freemium model that I think I agree with, just because it allows for organic growth and for people to try out the platform. If they like it, they bring it back to their company that they work at and say to their managers, hey, listen, I'm using this product, it's great, I'm a big fan, we should implement it here. And that's it seems like they're planning on that. But they also mention here that through this early access, we've already almost 100 companies sign ups and start paying for Team Edition in the last 6 weeks. So it shows that their revenue is really early on. They haven't really done a lot of monetization previously, and right now is when they flip on the switch and say, we want to focus on bringing in revenue to this platform. They're not the only one doing this. So there's a few companies that are listed here: Fathom, Gong, HubSpot, Salesforce, SalesLoft, and Course. So if you look at, for example, going back to the app marketplace here, some of the apps listed here do exactly what Fathom is doing, but let's look into the distinction. So Course AI, for example, it's a massive deal that Zoom Info actually invested in and bought the company. So they drop $570 million on Course AI as AI shakes up the sales marketplace. And here we see that Course AI is pretty much doing something similar. So they listen to sales conversations and then help improve interactions between salespeople and customers. And this just shows us that there is a lot of money in the space, with Zoom investing 570 million. And there's another company called Gong. Here we see that Gong is one of the hottest startups in this space, having raised over $500 million. Its most recent raise was $250 million at a $7 billion valuation last month. So Chorus doesn't only just do Zoom, they also do a few other features. However, it just shows that the space is massive. And if Fathom can capture a small part or even a medium part in this could be $1 billion company just from seeing competitors in this space raising a ton of money and also being valued high, as well as bringing in real revenue to the company, to the founders, and to the investors. So with having said that, let's go back into the company and see how they're different from these major competitors that are already in the market. So they list that Gong, Course, and Clones are sales specific, and that is true. I've looked a little bit into the companies. They really focus on sales teams, which I think have the best use case for this. But Fathom says that they focus on being used by the entire company and not just by sales teams. So I already see the use case for sales teams, super helpful. But on top of that, I know a lot of startups and medium-sized companies that we work with in venture investing and angel and venture capital. They are valuing transparency a lot, and having a tool that not only caters to the sales team, but also is able to record notes for internal meetings, for meetings between marketing and product design or engineering, can be really helpful. So for sales team, Fathom provides value to sales reps, not just sales managers. And then Fathom's PLG motion and lower price point of $40 per user versus $100 per user per month gives us a greater distribution and significant advantages in current marketing conditions where customers are price conscious. So You don't just want the company to be the cheapest, but also have great functionality, great user experience, and it looks like they are trying to price a little bit lower. Excuse me. However, even with $40 per user, this company could be very valuable. And then compared to other generalized solutions such as Otter, Fathom combination of Zoom App Marketplace and virality gives them a significant distribution advantage. I agree with that. So this is the marketing that they're playing. They're not focusing on going out there and selling this product, but really focusing on having the best product out there so people will use it. I would have loved to see a little bit more specifics on why their solution is better to other generalized solutions. However, this is what we have here. So this might be one of the questions that we want to say here. So how is the software better? So this is more research that I would do if I decide that this is a good investment. Before I place an order here, I would definitely look more into really what is their competitive advantage on the software side or on reaching the market or the pricing or the business model. Fundraising, I'm not going to go too much into it. It just lists the investors that are already part of this. It says that they have early Zoom investors, which is really helpful because they really understand the space fairly well and they know the potential that is here. They also have notable founders that invest in the company, such as People AI, founders of Reddit, Twitch, Cruise, so all fairly successful companies. So having those investors being part and really, being active and giving advice to the founders can be really helpful, opening their network in order to get the foot in the door with at least these companies as well as the people that they know in the startup space as well as in the enterprise space. And then they have early stage VC firms such as Character, Soma Capital, Global, Founders Capital, Active Capital, Rackhouse VC. And then they also list that Zoom itself, through its newly Zoom Apps Fund, also invested. They don't disclose how much. I would have loved to see if they just put in $10,000 in, or if Zoom actually thinks this is a great bet and put out of the 5 million, put maybe $1 million in, or 500,000. That would also be a great sign of confidence. So that might be who are the largest investors. Zoom investment participation. So that brings us back here. Now we want to expand that coalition further by including you, our beloved early adopters. That is all fair. Let's look into a little bit about details of the company. We see here that the finances they show here are up to January 2022, so they don't have any information of the past 6 months. However, they do say they currently have $1.5 million in cash on hand. And then over the past 3 months prior to right now, their revenues averaged $4,000 per month. So they have the first users coming in paying for the product. They say that the cost of goods sold averaged $0 per month. That depends on how they do their accounting, but I don't imagine that they can really have $0 per month in cost of goods sold, just because the processing, the storage of the videos, the processing, all of that costs them money. And I assume that they use something like AWS or a cloud provider that helps them with scaling up and having dynamic processing and storage capabilities. Their average expenses is $230,000 per month. So if we just do 1.5 million divided by 230,000, that is a cash run rate of about 6 to 8 months. So they definitely need to raise more money, and that's why they're doing this here, this fundraise, as well as raising more from current investors or new investors. We can look into their financial statement, the audited financial statement, but that only goes up to I think up to January 31st, 2022. So they don't have any updated ones for September, October, November. So that would be helpful to have as well when investing in this company. Um, Again, this is an early stage company, so this doesn't tell us the balance sheet is good to know, but it doesn't tell us too much about the economics and the profit and loss of this company. Looking at the statement of income statement, again, they mainly have expenses just because this is for last year where they didn't have any revenue yet. Then looking at the statements of equity, it says that most of it is in stock. The issuance of stock here, I assume, is mainly the founder and the ESA pool or the employment stock option pool. And then all of the other money is in safe obligations, as we can see here. Here is the statement of cash flows. Again, it tells us how they spend their money, the majority of which being cash used for operating activities. And then here is where they got most of the money from, which is, again, safe notes, which is an investment vehicle. And that is the investment vehicle we would do here. You would raise money in terms of safes. So looking into this here, future equity agreement safes, the investment terms are a $30 million valuation cap. So if the company raises money in a Series A, you convert your safe into equity at whatever investment terms they are. So if the company raises money at a higher than $30 million valuation, your valuation cap is 30 million. If they raise at a lower amount, then your valuation that the equity converts in is at that lower valuation. Here we look into a few of the risks. There's a few, and I think this is mandated by Wefunder. They say that the number one risk is that they don't receive future equity financing, and if this is the case, then the company will go bankrupt. However, with having notable investors and early venture capital firms, as well as having a good product that is growing and has good product market fit, I don't think this risk is it's definitely there, but any early stage company will have this risk. The second risk, say, is that their future success depends on the efforts of small management teams. So again, any company has this risk. It's all dependent on the management team. And if people in this management team either became ill or don't want to continue with this company, then the company will go under. But again, every company has this company. Here's the biggest risk that I am seeing so far is that they currently only support Zoom, and should Zoom significantly lose market share, we would be adversely affected. I don't think the second part is the biggest issue for me. It's just that if Zoom says, I like your features, we're just going to come out or we're going to promote Chorus AI, for example, then this would be terrible because then less people would use Fathom. Or they could just altogether say, we want to promote our own product. We won't let you continue using our platform or integrating it with our platform. So risk, I would list, could Zoom turn off their access? I think that is a big risk for me. And then for me is I would see cross-platform usage such as Teams, Google Meets, etc. And we'll look into that question in a second. Another risk here, they say, should the market for Zoom calls and decrease, the need for the product may also decrease. This is the same as number 3. Number 5, they say they operate in a tech business that depends on recruitment. Again, this risk happens to everyone. If they can't recruit good talent, or if the talent is too expensive, it will be a significant market risk. But being in this business, being with part of Y Combinator, raising venture capital allows them to recruit top talent, and incentivizing those engineers with stock options will also be beneficial, especially with those early companies. Stock options can be really valuable to bring in good talent. They say they transcribe and record sensitive data. So if there's a privacy breach, the business loses trust, and I agree with it. They need to put a lot of emphasis on cybersecurity and making sure the platform is very solid and doesn't have any privacy or other breaches. They also say that their rapid growth means that they continue to make changes to the core infrastructure. So this is, again, for any fast-growing business, you usually plan on making it usable for a certain amount of people. But then if you grow faster than what you really plan for, then you really need to make changes to the infrastructure. And that is actually a good problem to have. So I like that they list this risk, but I think that's a good problem to have. And then operational costs, again, I think this is an issue that they're dealing with. So they say the operational costs, video recording, storage, and transcription for the business are significant, and they will need to continue to fine tune the economies of scale as they grow and optimize operational costs for providing a free product. So since they're using a freemium model, they need to make sure that they bring in more paying customers than existing free customers use the platform, because each free user will take up a certain amount of uh, storage and transcription AI capabilities, and if and that can be really expensive. So I think this is a good place to stop here and see if there are see if we're still recording, and we are. That is good. Looking into the updates, the only update they have is that they were still rated again as one of the best business for usability here for small businesses. That is great, but I am very curious about a few things, and I'm going to just search them here. So what about Teams? How Teams? So here's a question. I see you answer not to having a presence on Teams, while Zoom has a good chunk of the market. Teams has caught up and certainly is emerging as a dominant player. Does your investment from Zoom come with unspoken terms of not bringing the software to Teams? So this is a really good question. The answer to that is by the CEO is that Zoom has put no such restriction on use. So that is really good to know. That means they can bring the platform to bring the service to other platforms, again, such as mentioned, such as Teams, Google Meets, and others. And they say that they're exclusive to Zoom because they have been a great partner for us, but also because doing a product like this well is hard enough to do on one platform. The Zoom customer base is large enough on its own to be a bigger TAM than most other B2B companies. So what this really means is that they believe that just enough Zoom users are on the platform that they think just focusing on that target market at first is going to be helpful. And since this is a small team and an early stage company, they really need to focus on one thing. And currently they're focusing on this one software with a few features and on one customer base, and that is within Zoom. So actually, let's look into Zoom. Here we see Zoom Communications Inc. They have a market cap of $23 billion. And out of that, let's look into their financials. They made last year about $4 billion in revenue, and the cost of revenue is about $1 billion. So I assume that they're probably alongside a similar margin that they get with this other SaaS company. So that is about a 75% margin. And then besides that, the operating expenses are fairly high. So at the end of the day, Zoom makes about 25% of all the revenue they bring in as operating income. And that is really good. So let's look into the valuation multiple. So they bring in about $4 billion in revenue. Comparison. Zoom is valued at 23 billion. The revenue is 4 billion, so that's a multiple of about 5.7 or 6. So the Fathom valuation is currently 30 million. So in order to reach that 30 million, how much revenue do they need? And we can just simply do that by finding that multiple. And they need about $5 million in revenue in order to get to a $30 million valuation. But here's a big but. They don't have that right now. And that's because all of the investors within the company, they bank on them growing their revenue, right? They are not investing in a company that's already established. They're looking at this company and see a lot of potential. and they see that if they have if they reach $5 million in revenue in the next few years, then they can get there. And that brings us back to the question here, and that is, what do you project to do in revenues in the coming years? The answer of the CEO is, we are too early to provide any sorts of revenue guidance, but we believe the market opportunity here is equal to that of Zoom itself. And that is massive. I mean, Zoom is a $20 billion company. And looking back into the other competitors here that have raised, have a valuation of around 7 billion or were sold to Zoom itself for 570 million, that just shows that there is a big market out there where other companies that are comparable have been raising a lot of, have been getting a lot of revenue and are able to convert that into value for the investors as well. Let's look into a few of these other questions, because I like the questions here by Kevin Fulmer. He asked if Zoom has discussed of buying them. He says he doesn't really believe in an exit strategy. I've observed that the best companies simply focus on building amazing products. I agree with the second part, but I also think it's super helpful to have an exit strategy, and it signals to the investors of what your ambitions are. And he says that with the market opportunity of Zoom itself. I don't agree with that necessarily. I think I like the vision, but I think Fathom has to really expand beyond just note-taking. I think they really need to be cross-platform. They could include some sort of video call service themselves and be a competitor to Zoom. But again, this is just far in the future, and I like that the founder is really focusing on the now. Although I would like to see some sort of revenue plans, and any company and any investor needs to see kind of revenue plans and revenue projections. Maybe that has to do with the Regulation C fundraising dynamics, and giving revenue projections and then not meeting them allows people to sue them. But even just seeing what his current plans are with the current growth they've experiencing and how many users they need to convert. So actually, we can do that kind of back of the envelope themselves. So they say they charge $40 per users per month. So that's yearly. That's going to be $480. So how many people would they need to just get to $5 million in revenue? And that is, or users needed. And that will be in the, and then divide that by here. So they need about 10,000 users in order to reach this 5 million mark. And then compare that to the average company size. Let's say their average company will be 30, let's say 30 users or 50 users, large company. Let's say 100 users per company. So they need about 100 large customers, or 300, oops. Or 360 customers that are smaller companies. And they say they already have 100 companies. I assume they're smaller than this. In the beginning, it's harder to sell to larger corporations. It takes some time. But I don't have any doubt that finding a few companies with 30 people on their teams, or even 100 people on their teams, is impossible. So there's some companies that have this many customers. So if they this many users, so if they can just convert one large client, one of the Fortune 500s, they could convert this many people just with one customer. So that is also good to know that that is possible. So let's see if there's any other questions that we should go over before we wrap up. What are you charging enterprise solution? Here they say $40 per month. Do you plan on rolling out freemium model for individual users? I like this question a lot here, and this is really helpful for SaaS companies. And what is their customer acquisition cost? Let's see what he says. He says, for competitive reasons, I won't go into the specifics, but it's quite low since the growth of marketplace is word of mouth driven. So I would, if I was investing a large amount, let's say 500,000 or $1 million into this company, I would definitely need to find out these numbers, customer acquisition costs, and then the net present value. They don't know yet. Lifetime customer value, LTV, and then finding that ratio of CAC to LTV will tell us if this is positive, which it should be. That's what he's saying, the CEO. Then that kind of helps us model out really what investment could return if they can really get these clients. So again, since this is Wefunder and most people on Wefunder only invest a couple hundred to a couple $1,000s, this we won't be able to get this information. But if we were to invest with our venture fund or with an angel syndicate, these are all questions that we would need to get answered. So with that, here, this is another good question that I have on top of mind, and this is exactly what we say here. How is the software better than other solutions, or what is their moat? What is their unique competitive advantage? The CEO says, for one, the Fathom product is quite technical. It took myself and 4 others of my best engineers I've worked with over the years just to make over a year to make the version we launched over a year ago. You can make a crappy version faster, but if you want to be reliable, number one feature of any app like this, and be cost efficient at scale, I'd take you at least that long. So he says that the moat is that they have something technical. They don't compare themselves here to the competitors, which I would have loved to see them better than other solutions. But I think that's fair, that it is fairly technical, and I agree with that. The other half is momentum. Getting discovered in the marketplace is difficult unless you get there at the very beginning. And they claim that they did. I don't think they got there at the very beginning. That's what these two companies are, Course AI and excuse me, Course AI and Course AI and the other competitors that they list. Going back here, Course AI and Gong, SalesLoft. However, I don't think they need to be the first mover into this market. It's a fairly straightforward idea and feature, but implementing it is really important to get the best user experience. And as they said already, they want to be cross-functional. They want to be an app that's used by the entire company and not just the sales team. And with that, they are able to really have a much larger scope, a much larger TAM than just companies that focus just on the sales specific. But really understanding how they're better than other generalized solutions such as Otter would be helpful. So that is another question that I would really dig deeper in a long form due diligence. So where does this leave us? I think out of all the companies I've looked at over the past few months on the Wefunder platform specifically, and Start Engine and other crowdsource investing platform, this is a company that I'm fairly bullish on. I think this has a lot of potential to be a 10x investment, even a good potential to be 100x return. But in order to get 100x return, this company really needs to be the best in its place. It needs to beat Chorus. It needs to be integrated in many Fortune 500 companies. And so what would need to happen? Fast sales growth. So I would need to see that they are able to convert hundreds of companies, or they need to be able to convince hundreds of companies to use the product. And if they are able to do that, they have the mode of it's going to be tough for them to switch because all of the data will be within Fathom, and they integrate that into their other CRM platforms. And it's going to be a tool that people start to depend upon, sales reps as well as internal team managers. They will they need to get to a point where other people can't live without this. And at that point, this company could grow into hundreds of million valuation or even $1 billion valuation. I'm a little bit concerned about the exit plan. It doesn't sound like he has or believes in an exit strategy, but with that comes the risk for crowdsource investors that we will never be able to exit our investment in the next 5 to 10 years. However, I think the founder has been working in the tech space already and knows that acquisitions as well as going public are on the table. So if this company can really deliver on all of their plans, this could be a great investment. So with that, keep in mind, investing in anything in crowdsourcing is super risky. Your money is going to be it can be illiquid for a long time. And with that, you need to keep in mind, don't invest anything more than you can afford to lose. However, I like the potential of this investment having a 10x return, 100x return, and then the downside is you might lose all your money. So this is a bet you need to make on yourself, but I think this definitely has some potential. So with that, I want to say I hope you like this content. Like the video if you enjoyed it. Subscribe if you are interested in learning more about venture capital, angel investing, crowdsource investing, or if you're a founder yourself. I have a lot of videos on new technologies and how to implement them, business plans and strategies. And with that, check out my other videos where I review other crowdsource investing companies or companies that we've invested in the past. And let me know in the comments what your thoughts are. If you would like me to make another video, hit the thumbs up. Let me know if you would like another video on this specific company. I can make a more in-depth analysis that is both in-depth and as well as shorter, better edited, and then I will do that in the future. With that, thank you so much for watching, and I'll see you in the next one.